If I lost everything today and had to start over with just $10,000, what would I do? Would I save it, invest it, or start a business? In this video, I'm going to break down exactly how I'd use $10,000 to build wealth from scratch. No gimmicks, just smart strategies that work in today's economy. Stick around until the end because I'll also share common mistakes to avoid so you don't waste your money. Let's dive in. Step 1. Setting the right foundation. The first $1,000. Before making any investments, the first and most important step is building a strong financial foundation. Without this, even the best investments won't protect you when unexpected expenses arise. Many people make the mistake of putting all their money into stocks, crypto, or real estate without securing a financial safety net. Then, when an emergency hits, a medical bill, car repair, or sudden job loss, they are forced to sell investments at a loss, wiping out months or even years of progress. Priority number 1. Emergency fund. $1,000. Why an emergency fund? Life is unpredictable. Having at least $1,000 set aside in an emergency fund acts as a financial cushion, preventing you from dipping into investments or taking on high-interest debt when unexpected expenses arise. This is not an investment, it's a safety net. The goal is to have enough cash on hand to cover urgent needs without financial stress. Where should you keep it? The best place to store an emergency fund is a high-yield savings account, which offers easy access to your money while earning some interest. Some of the best options include Ally Bank, Marcus by Goldman Sachs, and Wealthfront. Unlike stocks, real estate, or crypto, this money is liquid and safe. You can withdraw it instantly without worrying about market fluctuations. Once I have this emergency fund in place, I'm ready to invest the rest of my $10,000. Step 2. Investing in myself. $1,500, $2,000. Before I put a single dollar into stocks, real estate, or any other investment, I'd first invest in something even more valuable, myself. Why? Because the best return on investment comes from acquiring high-income skills that can significantly increase my earning potential. Unlike stocks or real estate, which depend on market conditions, skills are something I own forever. If I develop valuable skills, I can always find ways to make money, no matter what happens in the economy. Think about it. Many millionaires and billionaires didn't start with large investments. They started by learning skills that allowed them to build wealth. Whether it's sales, coding, marketing, or finance, these skills are the foundation of long-term success. How I'd spend this money? 1. Online courses and books. $500, $1,000. Books that teach wealth and investing. The Millionaire Fastlane. Learn how to escape the slow path to wealth. Rich Dad, Poor Dad. Understand how rich people think differently about money. The Psychology of Money. Learn how to master your financial mindset. Online courses. Platforms like Udemy, Coursera, or Skillshare offer affordable courses in digital marketing. Learn how to grow businesses online. Investing in finance. Understand how to make smart money decisions. Coding and tech skills. Gain valuable skills in a high-paying field. Sales and negotiation. Master the art of persuasion to increase income. 2. Networking and mentorship. $500, $1,000. Why? Because who you know is just as important as what you know. Attend conferences and networking events to meet successful entrepreneurs and investors. Join paid communities and masterminds where experts share insider knowledge. Find a mentor. Learning directly from someone successful can accelerate growth. Bottom line, investing in myself sets me up for long-term success. And if I develop valuable skills and strong connections, I'll be able to make more money, which is the real key to financial freedom. Step 3. Investing in the stock market. $4,000, $5,000. Now that I've built a strong financial foundation and invested in my own skills, it's time to put my money to work. Why invest in stocks? The stock market has historically outperformed real estate and most other asset classes over the long term. Instead of letting my money sit in a bank, losing value to inflation, I want to invest in diversified low-cost index funds and stocks that will grow my wealth passively. The goal? Long-term wealth creation through compound interest. By consistently investing and reinvesting profits, my money will work for me, requiring minimal effort. Where I'd invest my money? 1. S&P 500 index funds. 50% of my stock portfolio. Why? This fund tracks the 500 largest U.S. companies, providing instant diversification. Historically, The S&P 500 has averaged 8 to 10% annual returns over decades. It's a low-risk, passive investment strategy with strong long-term growth. Best funds? Vanguard's VU, Fidelity's FXAIX, or Schwab's SWPPX. Example, if I invest $2,500 now and let it grow at 8% per year, it could double in less than 10 years without adding any extra money. 2. Growth stocks and ETFs 30%. Why? These investments target high-growth industries like technology, AI, and healthcare. ETFs like QQQ or ARKK give exposure to disruptive companies. Individual stocks, companies like Tesla, Nvidia, or Amazon have delivered massive long-term gains. Goal: invest in future industries that have the potential for higher-than-average returns. 3. Dividend stocks. 20%. Why? These stocks pay passive income in the form of dividends, creating cash flow while my investments grow. Best dividend stocks. Johnson & Johnson, healthcare giant with steady dividends. Coca-Cola, a long-term, recession-proof business. Procter & Gamble, a consumer goods powerhouse. Strategy: reinvest all dividends to benefit from compound growth over time. Final goal: build long-term wealth. I won't try to time the market. I'll invest consistently and let compound interest do the work. The key is staying invested, reinvesting profits, and thinking long-term. By following this strategy, I'll be on my way to financial freedom. Step 4. Real estate or alternative investments. $2,000, $3,000. Now that I've built a strong stock portfolio, it's time to diversify my investments. Putting all my money into one asset class, whether it's stocks, crypto, or real estate, risk. That's why the wealthy spread their investments across multiple assets to protect against market fluctuations. Why real estate? Real estate is one of the best ways to build wealth because it provides passive income. Rental properties generate cash flow. Appreciation. Properties increase in value over time. Tax benefits. Investors can deduct property expenses and reduce taxable income. But with only $2,000, $3,000, I can't buy a house outright. Instead, I'd invest in real estate alternatives that allow me to own a portion of real estate with small amounts of money. Real estate options with $2,000, $3,000. 1. Real estate investment trusts, or REIT. They're like stocks for real estate. You invest in companies that own and manage income-generating properties. REITs pay dividends, providing passive income. No need to deal with tenants, repairs, or maintenance. Best REITs to consider. VNQ, a diversified fund that invests in commercial and residential properties. O, known as the monthly dividend company, because it pays investors every month. 2. Fractional real estate platforms. What if I want to invest in actual properties but don't have $100,000? That's where fractional real estate investing comes in. Platforms like Fundrise, Roofstock, and Arrived Homes let me invest in rental properties with as little as $500. I earn a portion of the rental income and benefit from property appreciation. Great for long-term passive income without the stress of managing properties. Final goal: creating a balanced portfolio. By investing in both stocks and real estate, I'm not dependent on one income source. If the stock market crashes, my real estate investments can provide stability. Diversification is key to long-term financial security, and this step ensures I'm building wealth across multiple asset classes. Step 5. Starting a side hustle. $1,000, $2,000. While investing is crucial for building wealth, relying only on investments isn't enough. I'd take part of my $10,000 and use it to build an extra income stream through a side hustle. Why start a side hustle? Relying on one job is risky. If I lose it, I lose my only income. A side hustle provides extra cash flow to reinvest and grow wealth faster. Many millionaires have multiple income streams. I'd follow the same strategy. With $1,000, $2,000, I could start several different side hustles, depending on my skills and interests. Side hustles I'd start. 1. Freelancing. If I have a skill writing, graphic design, video editing, or coding, I'd offer services on platforms like Upwork, Fiverr, TopTool. How I'd invest: upgrade my tools, a better laptop or design software, take online courses to improve my skills and charge higher rates, market my services through social media or a portfolio website. 2. E-commerce or print on demand. Selling products online is a scalable business that can make passive income. I could use Etsy for digital products like planners, printables, or templates. Shopify to create my own online store, Amazon KDP to sell low-content books. How I'd invest $500, $1,000 for design software, ads, or website hosting. Print-on-demand platforms like Printful or Redbubble to sell t-shirts, mugs, or posters without holding inventory. 3. Content creation. YouTube, blogging, or TikTok. Creating content can turn into a long-term asset. YouTube and TikTok pay ad revenue once I build an audience. Blogging can make passive income through affiliate marketing. How I'd invest $500, $1,000 for a good microphone, camera, or website, domain. Take a YouTube or blogging course to learn SEO and monetization strategies. Final goal: accelerate financial freedom. With a side hustle, I wouldn't just depend on my investments, I'd actively grow my income. More income equals more money to invest and build wealth faster. The key: taking action now. Biggest mistakes to avoid when investing $10,000? Before wrapping up, let me share some common mistakes that could destroy your $10,000. Mistake number 1: trying to get rich quick. Avoid day trading, gambling in crypto, or chasing hot stocks. Wealth is built over time, not overnight. Mistake number 2: not having an emergency fund. Investing everything without a safety net can lead to financial disaster. Mistake number 3: spending instead of investing. Many people get a lump sum and buy luxury items instead of assets. Mistake number 4: not diversifying. Putting all $10,000 into one stock or one business is too risky. Spread it out. Final thoughts: the best way to invest $10,000. So, here is my final breakdown of how I'd invest $10,000 if I had to start over. $1,000. Emergency fund. $1,500. Investing in myself. $4,500. Stock market. $2,000. Real estate or alternative investments. $1,000. Side hustle or online business. By following this strategy, I'd build wealth safely, generate passive income, and create multiple income streams. What would you do with $10,000? Let me know in the comments. Like, subscribe, and hit the bell for more financial tips.